I'm Jean, and this is Bank of Singapore Research. As we head into the middle of the year, fears that the world economy could slip into recession is dominating risk sentiment, amid warnings of stalling China growth and a Federal Reserve that is determined to tighten policy aggressively to tame inflation. Senior Fed officials, including Chairman Jerome Powell, have signaled clearly that the Fed intends to continue raising rates in the coming months, including 2 further 50 basis point hikes in June and July, until they see inflation coming down in a clear and convincing way. Globally, prices of energy and food commodities such as wheat, palm oil and dairy remain elevated, exacerbated by supply disruptions from the Russia-Ukraine war. This is pressuring the Fed and other central banks to stay focused on inflation even as growth slows. In China, a sharp slowdown in economic activity due to the government's strict zero-COVID policy will continue to weigh on sentiment, despite recent pledges by China's State Council to stabilize the economy. Overall, given the recent sharp declines in risk assets, short-term rebounds are likely. Beyond a relief rally, however, we do not believe a definitive market bottom has been made, although a significant part of the downside has likely been worked through at these levels. In the event of a recession, additional equity downside will likely be triggered by corporate earnings declines. We maintain our view that investors should not capitulate into the latest bout of selling in markets, even though much of the downside in terms of higher rates and slower growth has already been priced in. Given the near-term growth headwinds, investors with concentrated positions in the technology sector, particularly in individual names, can switch their exposure into other diversified investments. For instance, a broader basket of companies in the energy sector with long-term potential, companies that benefit from reopening trends, and sectors with pricing power, as well as emphasizing value over growth. And in fixed income, we see selected opportunities emerging in the long end, high-quality segment of emerging market investment-grade bonds. For more information, please read the latest edition of our monthly investment guide titled The World to Come.